The cannabis industry has never followed a conventional path, and neither has the capital that fuels it. From the outside, it appears to be one of the most dynamic and rapidly expanding sectors in the modern economy, driven by legalization, consumer demand, and a steady shift in public perception. Yet for those operating within it, the reality is far more complex. Beneath the surface lies a fragmented and often restrictive financial landscape, where access to capital is neither straightforward nor guaranteed. Entrepreneurs and operators quickly discover that success in cannabis is not just about building a viable business, it is about navigating a system where traditional financing channels are limited, cautious, or entirely absent. This disconnect between opportunity and accessibility creates a unique challenge. While other industries benefit from established banking relationships, institutional lending frameworks, and predictable underwriting standards, cannabis operators must operate in a space where those structures are either evolving or deliberately withheld. Financial institutions often remain hesitant due to regulatory uncertainty, compliance concerns, and reputational risk. As a result, even well-established businesses with strong revenues and proven operational capacity find themselves struggling to secure the funding required to scale, expand, or stabilize their operations. The issue is not a lack of capital in the broader market, it is a lack of direct access to the right sources of capital that understand and are willing to engage with the cannabis sector. This is where the distinction between availability and accessibility becomes critical. Capital, in its various forms, does exist for cannabis businesses. However, it does not exist in the open, readily available through conventional channels or simple application processes. Instead, it resides within specialized networks, private credit funds, family offices, niche lenders, and alternative financing groups that have developed both the appetite and the expertise to operate within regulated industries. These capital providers are selective, disciplined, and often insulated from the broader market. They do not advertise their services, and they do not respond to unsolicited inquiries. Their engagement is predicated on trust, alignment, and the quality of the opportunities presented to them. For many operators, this creates a fundamental barrier. Without visibility into these networks and without a clear understanding of how to position their business within the expectations of private capital, they are left attempting to navigate a system that is largely opaque. Efforts to secure financing often become reactive, sending proposals to multiple lenders, revising terms repeatedly, and hoping that persistence will eventually yield a positive response. Unfortunately, this approach rarely produces meaningful results. In fact, it often has the opposite effect, eroding credibility and reinforcing the perception that the opportunity is not properly structured or market-ready. The reality is that private capital does not respond to volume, it responds to precision. It is not interested in broad outreach or generalized narratives. It is focused on clarity, structure, and alignment. In the cannabis sector, this is especially true, as lenders must account for a range of additional risks, including regulatory compliance, licensing frameworks, operational variability, and market volatility. These factors do not eliminate the willingness to lend, but they do raise the threshold for engagement. Capital providers in this space are not looking for perfect deals. They are looking for deals that are properly understood, properly structured, and properly presented. At Equus Capital Finance, this understanding forms the foundation of our approach. We do not position ourselves as lenders, nor do we act as transactional brokers seeking to match opportunities with capital on a superficial level. Instead, we operate as a capital markets intermediary, focused on structuring and facilitating access to a curated network of private capital sources that are already active within the cannabis sector. Our role is not to find capital in a general sense, but to create a pathway through which capital can be accessed in a deliberate and strategic manner. This process begins with a fundamental shift in perspective. Rather than asking who might be willing to finance a particular deal, we focus on how that deal must be structured in order to align with the expectations of the capital that already exists. This requires a deep understanding of both sides of the equation, the operational realities of cannabis businesses and the underwriting criteria of private lenders. It involves examining the opportunity not just from the standpoint of growth and potential, but from the standpoint of risk, control, and capital preservation. In practice, this means taking a disciplined approach to structuring. Every aspect of the opportunity is evaluated through the lens of how it will be perceived by a lender. The capital stack is assessed to ensure that it is coherent and sustainable. Collateral positions are clarified and, where necessary, strengthened. Cash flow projections are analyzed to determine their ability to support debt service under various scenarios. Regulatory considerations are incorporated into the overall structure, ensuring that compliance risks are understood and mitigated. This level of detail is not optional, it is essential. In a market where lenders are already operating with heightened caution, any ambiguity or inconsistency can be enough to halt engagement entirely. Once this alignment is achieved, the process moves into a more targeted phase. With a clearly structured and well-defined opportunity, we engage with capital partners who are specifically positioned to evaluate and, where appropriate, fund transactions within the cannabis space. These are not generic lenders. They are specialized groups with established mandates, defined risk parameters, and a track record of operating within regulated industries. They understand the nuances of cannabis financing, including the challenges associated with licensing, compliance, and market dynamics. More importantly, they have the infrastructure and the intent to deploy capital in this sector. Access to these capital partners is not a matter of simply making an introduction. It is the result of a deliberate and curated process, where opportunities are presented in a manner that aligns with the expectations and preferences of each lender. This is where the intermediary role becomes particularly valuable. By acting as a bridge between operator and capital, we are able to translate the complexities of the business into a format that lenders can efficiently evaluate. We ensure that the narrative is supported by structure, that the projections are grounded in reality, and that the overall presentation reflects a level of professionalism consistent with institutional standards. This approach also serves to protect the integrity of the opportunity. In a niche market like cannabis financing, reputation is a critical asset. Lenders operate within relatively small networks, and their perception of an operator or intermediary can influence future interactions. By maintaining a disciplined and selective approach to engagement, we help ensure that each introduction is meaningful and credible. This is not about increasing exposure, it is about enhancing the quality of that exposure. A well-structured deal presented to the right capital partner has a significantly higher probability of progressing than a broadly distributed proposal with limited alignment. It is also important to recognize that cannabis financing is not a one-size-fits-all solution. The type of capital required will vary depending on the stage of the business, the nature of the assets, and the strategic objectives of the operator. For some, the immediate need may be working capital to support day-to-day operations or to bridge a temporary liquidity gap. For others, it may involve asset-backed financing to leverage real estate or equipment. In more advanced scenarios, operators may be seeking growth capital to expand into new markets, acquire additional licenses, or scale production capacity. Each of these scenarios requires a different approach, both in terms of structure and in terms of the capital sources engaged. Private credit facilities, for example, can provide flexible funding solutions tailored to the specific cash flow dynamics of a cannabis business. These facilities may be structured to accommodate seasonal variations, inventory cycles, or other operational factors unique to the industry. Bridge financing, on the other hand, is often used to address short-term needs, providing liquidity while a larger transaction is being arranged or while specific milestones are being achieved. Asset-based lending can unlock value from existing holdings, allowing operators to access capital without diluting ownership. Growth capital, whether in the form of structured debt or hybrid instruments, can support expansion initiatives while maintaining a balanced capital structure. What all of these solutions have in common is that they are driven by structure. Pricing, terms, and conditions are all influenced by the level of risk perceived by the lender, as well as the degree of control embedded within the transaction. In the cannabis sector, where risk profiles are inherently elevated, this often translates into higher pricing and more rigorous due diligence. While this may be viewed as a challenge, it is also a reflection of the realities of the market. The objective is not to avoid these conditions, but to navigate them effectively, ensuring that the capital secured is both appropriate and sustainable. This brings us to a critical point: not all capital is beneficial. Securing funding is only one part of the equation. Securing the right funding is what ultimately determines long-term success. Misaligned capital can introduce constraints that limit operational flexibility, create pressure on cash flow, or impose conditions that are difficult to satisfy. In some cases, it can lead to situations where the operator is forced into unfavorable decisions simply to meet the terms of the financing. This is why a strategic approach is essential. Every financing decision should be evaluated not only in terms of its immediate impact, but also in terms of its implications for the future. At Equus Capital Finance, we view each transaction as part of a broader capital journey. Our objective is not simply to facilitate a single deal, but to establish a framework that supports ongoing growth and development. This involves considering how each financing decision fits within the overall trajectory of the business, and how it positions the operator for future opportunities. It requires a level of foresight and discipline that goes beyond transactional thinking, focusing instead on long-term alignment and sustainability. In practical terms, this means working closely with operators to understand their strategic objectives and to develop a capital plan that evolves with those objectives. It means identifying potential inflection points, moments where additional capital may be required, or where existing financing structures may need to be adjusted. It also means maintaining relationships with capital partners over time, ensuring that there is continuity and consistency in how opportunities are presented and evaluated. This continuity is particularly valuable in a market where trust and familiarity can significantly influence decision-making. Ultimately, the goal is to create a pathway to capital that is both clear and repeatable. A pathway that is grounded in an understanding of how the market operates, and that is supported by relationships with capital sources that are aligned with the specific needs of the cannabis sector. This is not a shortcut, and it is not a guarantee of immediate results. It is a disciplined process that requires preparation, structure, and a willingness to engage with the realities of the market. For operators who are serious about scaling their business, this process represents a significant advantage. It transforms the pursuit of capital from a reactive exercise into a strategic initiative. It replaces uncertainty with clarity, and inefficiency with precision. Most importantly, it aligns the business with the expectations of the capital it seeks to attract, increasing the likelihood of a successful outcome. The cannabis industry will continue to evolve, and with it, the financial landscape that supports it. As regulations become more defined and as market participants gain greater experience, the barriers to entry may gradually diminish. However, the need for structured, strategic access to capital will remain. This is not a temporary condition, it is a defining characteristic of a regulated and specialized market. For those navigating this space, the message is clear. Capital is not something that can be approached casually or opportunistically. It requires intention, preparation, and a deep understanding of how it operates within the context of the industry. It requires recognizing that access is not granted by default, but earned through alignment and credibility. At Equus Capital Finance, our role is to facilitate that alignment. To provide access to a private network of capital sources that are already engaged in the cannabis sector. To ensure that opportunities are structured and presented in a way that resonates with those sources. And to guide operators through a process that is both strategic and efficient. Because in cannabis financing, the difference between success and stagnation is not determined by the availability of capital. It is determined by the ability to access it correctly. And with the right approach, the right structure, and the right network, that access becomes not just possible, but achievable. If you are serious about securing capital for your cannabis venture, the next step is not to broaden your search, but to refine your approach. To move away from generalized outreach and toward a structured, targeted strategy that aligns with how private capital operates. To engage with partners who understand the nuances of the market and who have the relationships necessary to open the right doors. Visit Equus Capital Finance to explore how our private network and disciplined approach can support your financing objectives. Let's structure your opportunity properly, connect you with the right capital partners, and move your business forward with clarity and confidence.